All right, accounting students, welcome to this explainer. If you've ever stared at a massive list of branch activities and thought, how on earth does the head office legally and accurately pull all this together at year end? Well, you are definitely in the right place. We're going to dive into your definitive study guide for branch accounting principles so you are absolutely ready for those exams. Today, we're breaking down the whole process of branch balance incorporation step by step using the exact methods you need to master. Let's get right into it. So here's your mental syllabus for today's session. First, why do we incorporate branch balances at all? Second, the detailed method. Third, the abridged method. Fourth, handling assets and liabilities. And finally, closing out the branch account.
Okay, Section 1. Why incorporate branch balances?
Imagine you're the head office accountant right at year end. The fundamental question you've got to answer is, how do we actually get the branch balances into the main head office books? I mean, the branch has been operating all year long, right? They've made money, they've incurred expenses, bought some assets. So, what are the primary steps to consolidate everything so the head office has one complete financial picture?
Well, the crucial point here is that we have to incorporate both the profit or loss and the assets and liabilities. You literally cannot have one without the other if you want an accurate ledger. The operational results absolutely must flow into the firm's general profit and loss account, while the actual financial position gets brought right into the consolidated balance sheet.
Moving on to Section 2, the detailed method.
Let's tackle the heavy lifting first. This is the meticulous, super granular path for incorporating those operational results. Think of the detailed method like reading every single item on a ridiculously long grocery receipt. You are tracking every penny of revenue and expense. Under this method, the head office doesn't just glance at the final number. No, they prepare a proper branch trading and profit and loss account. And that means passing individual specific journal entries for literally all of the revenue items.
Okay, so for the trading account phase of this detailed method, you'll use a clean ledger format. For your debit items, things like opening stock, purchases, and wages, you'll debit the branch trading account and credit the branch account. And then conversely, for your credit items, like sales and closing stock, you do the exact opposite. You debit the branch account and credit the branch trading account. It's a highly methodical, step-by-step process. Once you've painstakingly tallied those trading items, you're going to move that gross profit down into the profit and loss phase. To do this, you simply debit the branch trading account and credit the branch profit and loss account. And of course, if the branch somehow suffered a gross loss, you just reverse that entry. Simple as that. Now, just like we did with the trading account, we painstakingly move every single P&L item. For debit items like salaries, rent, or depreciation, you're going to debit the branch profit and loss account and credit the branch account. For credit items, like any income or maybe some discounts received, you debit the branch account and credit the branch profit and loss account. And finally, after all those individual entries, we land on the prize, the net profit. To transfer it up, you debit the branch profit and loss account and credit the main general profit and loss account. That completes the detailed method of moving operational results up to the head office. And again, just reverse the whole thing if it's a net loss.
All right, Section 3, the abridged method.
Now, if you're sitting there feeling the weight of all those detailed entries we just went through, you are absolutely going to love this next approach, the shortcut. If you only take away one thing for your exam regarding this shortcut, memorize this concept, the memorandum account. Under the abridged method, the head office prepares a memorandum branch trading and profit and loss account purely to calculate that final net profit behind the scenes. This lets them skip all those individual revenue entries in the official books. Here's the absolute magic of it. Instead of reading that whole miles-long grocery receipt, the abridged method just looks at the final total. It requires only one single consolidated journal entry for the final result. Just one. This single entry achieves the exact same destination as the detailed method, moving the net profit directly into the general profit and loss account. You literally just debit the branch account and you credit the general profit and loss account. Boom, that's it. The profit is incorporated. And yes, if it's a net loss, reverse it. So let's take a second to summarize these two distinct profit incorporation methods side by side, because this is crucial for your exams. The detailed method requires a proper account and meticulous item-by-item journal entries for every single revenue and expense. Meanwhile, the abridged method uses a memorandum account strictly off to the side just to find the math, and then uses one single consolidated journal entry to book the net profit. It is a massive, massive time saver.
Moving on to Section 4, assets and liabilities.
Now that we've solved the profit problem, we need to bring these two paths back together by looking at the branch assets and liabilities to satisfy our consolidated balance sheet. And here is a universal truth in branch accounting. Regardless of whether you use the detailed or the abridged method for profit or loss, the entries to incorporate branch assets and liabilities remain exactly the same. Your profit method does not change how you handle the balance sheet items at all.
So memorize this universal rule to anchor any exam question you might face. Assets are debited and liabilities are credited against the branch account. For your branch assets, you debit the individual branch assets accounts and credit the branch account. For the branch liabilities, it's just the reverse. You debit the branch account and credit the individual branch liabilities accounts. It's a wonderfully consistent rule.
And finally, Section 5, closing the branch account.
We are finally at the deeply satisfying resolution of our accounting cycle, closing out the books. Let's look at what happens to the branch account itself after all these entries. Because you've methodically accounted for the profit and the net assets, the branch account magically zeroes itself out. We call this the perfect zero. Once those asset and liability entries are passed, the branch account in the head office books stands perfectly closed. Why? Because the net assets, which is just assets minus liabilities, right, will exactly equal the balance of the branch account after the profit or loss was incorporated. It is literally the ultimate accounting double check. So satisfying.
So, how do we start the whole process over again next year? Well, after the account stands closed at year-end, the head office simply reverses the asset and liability entries at the very beginning of the new accounting year. Doing this immediately reopens the branch account, showing the exact amount due from the branch as they kick off operations for another 12 months.
As we wrap up this explainer, I want you to think about how these two distinct approaches would actually impact the day-to-day workload of a real-world accounting firm. Mastering both is definitely key to dominating your exams, but out in the real world, you have to ask yourself, detailed accuracy or abridged efficiency? Which method is actually best for your head office? Something to think about. Thanks for studying with us today.